Hello guys, welcome to our channel. So today's entry is in Federal Bank. So as you can see here, this is a 1 hour order block right here, and our entry has been triggered at 130.25 and I have kept my stop loss at 129.15, and as per my plan, I am planning to take half my positions at 1:1, then trail my stop loss according to the momentum. Maybe I'll exit at 1:2 or 1:3 my whole positions. Let's see how the market goes. And don't worry guys, I'll explain how I marked my order block, what is the reason behind this trade, and everything in detail after the trade ends. So stay tuned. So guys, as you can see here, our first target has been achieved, which is 1:1 risk reward ratio. So I have closed half of my positions in 1:1 risk reward ratio, and I have kept my target to 1:2 ratio, which is a little bit lower than the day's high, and I have trailed my stop loss to the break even point, which is the price I entered, 130.25. So the market is closed for today, and as you can see here, the price didn't hit our second target, which is our 1:2 risk reward ratio. So our first half position was filled at 131.35, which was 1:1 risk reward ratio. Since it was an intraday trade and it didn't achieve a second target, so it was closed at 131.4. So basically what we achieved was around 1:1 risk reward ratio. So what was the reason behind my entry? So when you look at the market structure of Federal Bank, we can easily spot a good uptrend here. Since it was a good uptrend here, I was looking at buying opportunities and I marked the order block here. So what is order block? Basically in price section you might have heard supply and demand. So here is a demand zone, and you could say order block is a refined version of the demand zone. So how do you mark an order block? So as you can see here, this is the higher high, this is the higher low, and this is the higher high. So here you could see a break of structure, which means previous higher high was broken here, and in 30 minutes you could clearly see the break of structure here in this region, and in 1 hour you could say the breakout took here. But anyways, how to mark an order block? The last red candle before the breakout can be considered as the order block, and you could say this is the last red candle before the breakout. How did you mark this region as an order block? In that case, you should understand one thing: when there is a trend line here and the breakout happens, marking the order block in the trend line region is not very much advisable. It is not a high probability setup. So that is the reason I marked the order block in this region. So in 1 hour, as you can see here, 1 hour order block was marked here. This is the last red candle before the breakout of this previous high. And when you minimize it to 30 minutes, the last red candle was this. You could say there are two red candles here, why didn't you mark here? When considering order block, it should make a lower low. When it is an uptrend, when you are looking for an order block in an uptrend, it should make a lower low. This is a red candle here. If another red candle came till this region, you can mark this candle as a order block. But here it didn't make lower low, and that is the reason I marked this region a slight yellow color, as you can see here. Let me highlight it. So this violet region is the 30-minute order block, and we could refine this even more at 15-minute time frame, and the 15-minute order block will be considered at this one is the last red candle here. So I marked it as a 15-minute order block. But anyhow, how did I make an entry? I made an entry based on the 1 hour order block. The reason why I did so is because there are a lot of cases price comes near the 1 hour order block, it touches the 1 hour order block, and the price reverses. But I don't do this every time. The reason I did it because the stop loss is pretty low. Since when I entered based on our 1 hour order block, my stop loss was around 0.84 percentage. And when compared to the Federal Bank movement every day, it is pretty low. So that is the reason I entered at 1 hour order block. If the stop loss is like pretty huge and this order block is a pretty big region, I might have not entered in this region. I might have waited for the 30-minute order block or 15-minute order block. So as you can see here, as soon as our entry was filled, there was some bullish movement here, but anyhow the price reverses and touches the 15-minute order block and the momentum begins. This indicates that the big intuitions came into play in this region. As you can see here, it touched the 15-minute order block, gave a real good bullish movement. But since it was an intraday trade, market was closed and our second target was not achieved. But those who entered using the 15-minute order block could have get a really good risk reward ratio. They could have grabbed like 1:4 risk reward ratio, and it would have been a pretty good trade. But entering based on the 1 hour order block is also a pretty good trade because the stop loss was low. But there are some chances while waiting for the 15-minute order block, we might not even get the entry. Our price would have gone up from the 1 hour order block or the 30-minute order block. So that is the reason I entered here. And not only that, as I mentioned below, our stop loss was also pretty low. So overall, according to me, it was a pretty solid trade, and I hope you understood the reason behind this trade. And if you want more videos on how to spot an order block, what is liquidity, what is SMC, and more live trading videos, make sure to subscribe. And if you feel this video is helpful, hit the like button and comment and share it with your friends. Thank you so much for watching. See you in the next video. Bye bye.